when it comes to home equity and home equity lines of credit, why on earth would I want this instead of just a mortgage?
So a mortgage is a great way to get yourself into a home. That's what you use to purchase the home and gain that asset. Once you're in that home, it opens up a whole lot of possibilities.
JT, when it comes to home equity and home equity lines of credit, why on earth would I want this instead of just a mortgage?
Yeah, that's a great question. I think there's a lot of differences that go into having a mortgage versus having a home equity. And a lot of it just depends on what you want to do with those funds. So a mortgage is a great way to get yourself into a home. That's what you use to purchase the home and gain that asset.
Right.
Once you're in that home, it opens up a whole lot of possibilities. Some people buy that starter home, and that's where they want to be for a little bit of time, and then they want to go somewhere else.
Right.
Some people get that fixer-upper, and sometimes your situation changes. So one of the nice things about how the economy's been progressing is home values are continuing to increase. Leveling out a little bit right now, but a lot of people that bought that home, there's a lot more value in that home right now than they had before. So they can take advantage of that equity and pull it out for either a remodel, put a pool in the backyard, maybe they got a big unexpected expense that comes out, and now they've got that equity that they can leverage to use instead of having to go out and get a personal loan or a credit card or burn through their savings in some of those situations.
Or even at, kind of the rate environment we're in, we don't necessarily want to refi,
Yeah,
right?
definitely.
So this is a better way to utilize your equity without having to have a new locked in for X amount of years, right?
Yeah. Yeah. So if you look at rates, maybe 2020, rates were significantly lower than they are right now. So let's say that you had a 5% rate back then. Rates dropped a little bit after that. So if you drop down to 3%, that makes a difference of about $500 to $700 in your monthly payment. So if you want to go out and buy that same house, it would cost you $500 to $700 more just because rates changed.
Yeah.
But instead, you could leverage that equity, pull out a home equity line of credit or a home equity loan, and then you could make the modifications you need to your home, make some enhancements or whatever your situation's calling for.
Awesome. So you mentioned home equity loan and then home equity line of credit. Can you tell me the difference between the two?
So a home equity line of credit is utilizing the equity that's in your home, but it's a revolving account.
Okay.
So let's say you had $100,000 of equity that you could use in your home. You pull that out in a home equity line of credit, but you only need to use $20,000 of it. You're only going to make payments on that $20,000 that you pull out, and not that full $80,000. But if you need to use that $80,000, you have access to it.
Okay.
And as you pay that $20,000 down, you can continue to use that, similar to a credit card. And then you can make draws on that typically for up to 10 years. And just kind of reuse it and have it as a good backup plan there for you.
Okay, that's awesome.
Yeah.
That's awesome. So just like a credit card, basically, but you're using your home's equity as the revolving.
So
awesome.
that's great when you have something that you don't necessarily know how much money you need for it, or if you just want it as a backup. A lot of people get it for maintenance for their home. If their air conditioner goes out, their furnace, their fridge, water heater, some of those emergencies happen, you don't have to dip into your savings immediately. You can pull from that home equity line of credit, make those repairs, and then repay those funds or just continue to reuse it.
Well, and then something that maybe a lot of people don't realize is this rate is likely a lot lower than, for example, your big box store credit card, right?
Definitely.
Or whatever that looks like. So it could save you money in the end.
Yeah, most
if
certainly.
you're using it that way.
One thing you want to be cautious of, though, is those rates on these home equity line of credits, they are variable. So they will go up, they will go down, depending on what the prime rate is doing. So that payment can change month to month, even if that balance doesn't, just based on what rates are doing in the environment.
Okay, good thing to be aware of. And so tell me, a home equity loan, is it similar to a mortgage where I take it out for a fixed amount of time and pay it off, or what does that look like?
It's very similar. So let's say you want to put a pool in your backyard, and you know exactly how much money you need for that pool. You got a contractor, you've got a couple bids. I know I need $25,000. So you can go into a local branch and get that loan for $25,000. You're going to have a fixed term, a fixed interest rate, a fixed payment. So you know that payment's never going to change. Everything's going to work out perfectly. And then you can just go about it that way. Where you can kind of get in a bind there is, let's say they come back and they say, well, we need another $5,000 for this, or another $5,000 for that. You're locked into that dollar amount. So you would have to refinance that loan again to pull out the additional funds.
Okay, so maybe important, right, to get all of that, all the cost and everything finalized if you're relying on that full amount.
Yeah, 100%.
Okay, interesting. What are some of the biggest maybe things that you see with home equity loans and home equity lines of credit that maybe people need to be aware of? Like, don't forget this, right? Like you mentioned, it's a variable rate on the line of credit. We got to be aware of that so that our minimum payment is still being made every month, right?
Definitely. I think maybe being very conscious of what the terms are. So making sure you understand, is there a prepayment penalty for this loan?
Okay.
Some places do have, if you pay it off within the first 2 years or the first 3 years and close it, there's a penalty that you have to pay. It's not very large most of the time, but sometimes it's there. So being aware of that. Some places have closing costs associated with it. So if you're going to use it for a short period of time and then refinancing it, understanding the implications of those costs.
Okay.
And then again, when we look at those variable rates, making sure this payment could change. So if it does, can I afford that payment going forward and build that into my budget?
Okay. So you talk about budget, right? When we're looking to get a home equity line of credit or a loan, is that taken into consideration, right? Just like it is with a mortgage where we're looking at our debt to income and all of that in order to qualify for it, or how does that look?
Definitely. When we look at qualifying, we'll look at all those kinds of credit expenses. So car loans, credit cards, your current mortgage, a lot of those things. And then we'll take this new payment and we'll put it in there. Most lenders like to see a debt to income ratio of around 45 to 43% or lower, depending on your current credit profile. So that's a good target number to shoot for.
Okay, awesome. What would you say are maybe some of the biggest roadblocks for people when they're saying, oh, I know there's equity in my home, I want to utilize it?
I think right now one of the biggest roadblocks is the rate environment that we're currently in, which is really hard because that home equity line of credit, that's an interest-only payment. So when that payment goes up and you're making that payment, you're actually not paying anything towards principal. So when you get to the end of that 10-year draw period, you've still got that entire balance that you've got to make payments on. So I think that would definitely be one of the biggest things that people run into right now as a roadblock.
Okay, but correct me if I'm wrong, they can make payments. They can go above, right, the payment amount, the minimum balance if they wanted to.
Yeah, we always recommend people make as much of the payment as they possibly can. So if your payment's $300, but you can pay $500, that extra $200 is going to really help you out down the road.
Okay, all right. So maybe even when you're planning this out, plan for that in your budget too?
Yeah.
Okay, awesome. Any other roadblocks that you can think of?
Really just understanding what you want to use the funds for. I think that's the biggest thing. Once people can figure that out, why they want to utilize that equity, then they can start making decisions on which product do I need to use, how much do I need to pull out, and then we'll be able to help them kind of identify what some of those other potential roadblocks could be.
Okay. So from your, experience, right, being in this industry for a long time, what are some of the most common things that people are utilizing home equity loans and lines of credit for?
I think in today's environment, a lot of it is renovations on their home. A lot of people bought that home because they thought, well, I'm going to be here for a couple of years, then I'm going to move. Maybe their family situation changed, their employment changed. They can't necessarily move on to the bigger house that they want. So now it's time to make the house that they're in what they want it to be. So they'll redo the kitchen, they'll finish the basement, they'll put a pool in the backyard. So I think that's one of the big ones.
Okay.
Another thing right now, just again with that environment, is debt consolidation. People will take a lot of their credit cards that they've built up, some of their auto loans or student loans or some of these other big bills that are adding up. And by consolidating it into one payment, a lot of times it actually saves them a pretty good amount of money on a monthly basis.
Yeah, even with variable rates, right? Because chances are you're consolidating from that to something else that's lower. That's so cool.
And then the other thing is just emergency expenses. I've heard a lot of people say it's better to have it and not need it than to need it and not have it. So if something happens and you need to replace your roof or you've got to replace that water heater, you don't want to go through the whole process of having to apply, go through, get the funds for it, and then make that repair. And you definitely don't want to have to go to that store and say, okay, I'll do your in-house financing at 20% because I need it and you know I need it. It's better to have it there as a reserve and then be able to utilize it when you need it.
And correct me if I'm wrong, on the line of credit, if you're not utilizing it, then that's okay, right?
Yeah.
So it can just be there, like you said, for emergency purposes.
Yeah, exactly.
That's awesome. I love that. Okay, any other parting thoughts you have, JT, when it comes to home equity and how it can help us with our financial journey?
I think it's a very common product. It's there to really help the members kind of in the situation that they're in. So if you've got questions, reach out and let us help take care of you.
I love it. I love it. Well, you guys heard it from the expert. Thank you so much for joining us, JT.
Yeah, you got it.
Yeah, and thanks for all of you for joining us as well. And we will see you on the next episode of Guiding You Forward.